Welcome to Momentum Monday. Today is July 21st, 2024. Last week we saw a significant pullback in the tech sector. Here is a chart of the Nasdaq 100 QQQ, down several days in a row on a pretty heavy volume. And the main reason behind that pullback was that earnings report from ASML. ASML, it's a Dutch maker of machines that are used to make smart chips. Basically, ASML provides the equipment to companies like TSM and Samsung, and they make all the chips for all major companies in the world, like NVIDIA, AMD, Apple, anyone else you can think of, really. So ASML is kind of at the bottom of the food chain, just providing the equipment. So the market is paying special attention to their earnings every single season. And this time, again, they actually beat earnings estimates. But the problem was that their guidance was soft. And the market used that as a reason to completely demolish any stock related to semiconductors. And as you can see here, ASML gap down, down 3 days in a row. Now, probably on its way to test its 200-day moving average near 850, where I wouldn't be surprised to see deep buyers stepping up and accumulating. So anything semiconductor was completely crushed. You can see here, SMH closed below its 50-day moving average. The leveraged version of that ETF, SOXO, it's 3x long semiconductor CTF. Basically for a week and a half, it went from 70 down to 47. That's a pretty big, pretty significant pullback in a short period of time. So it's definitely notable to see that reaction. And then the next day after ASML, after that big earnings downside gap from ASML, we saw TSM, which is the biggest maker of smart chips. And they actually beat estimates, earnings and sales estimates, and they guided higher and still couldn't rally. You can see here, the stock gapped up a little bit, tried to rally in the morning, and then found resistance near its declining 20-day moving average, and it just proceeded lower, and it finished the week near its the lows of its weekly range. So the market was looking for a reason to sell off, and it found it in the ASML report. But just by looking at the market reaction to TSM, to ASML, you can definitely, maybe it's too early to make any early generalizations about the market sentiment towards earnings this season. But so far we can say that any good earnings in the tech sector is probably already discounted, already priced in. So any hiccup in tech earnings is very likely that is going to lead to a significant drop. At least that's how I'm reading the price action so far, and based on the market reaction to earnings. And even Netflix, they also beat earnings estimates by a little bit, but more importantly, they beat the expected subscribers growth, which is usually the number that the street is watching for. And despite of that, it still sold off on Friday. It tried to rally, but sellers overcame buyers, and the stock finished near its lows. So not off to a great start so far this earnings season for any tech bulls. And we'll know a lot more in the next couple weeks or so when we have the big mega caps reporting. I think starting next week we have Google and Tesla, and after that all the other big ones. So the next few weeks will be really volatile in tech land. You can see here the chart of the QQQ. I wouldn't be surprised if it tests It's rising 50-day moving average. This is the red line here. So it's around 470 at this point. So, but there could be a trade here next week. If it gaps down on Monday, or if it just tests the 50-day at some point, I wouldn't be surprised if buyers step up here, and there might be a tradable bounce. Like it could last a day or two. There could be a bounce from the 50 towards the declining 20-day. So keep an eye on that. In the meantime, as we talked last week, we continue to see sector rotation as interest rates pulled back in the week before, and they continue to pull back. We saw a rotation back into sectors that have been lagging year to date. Most notably small caps. We saw that huge gap up here last Thursday on a lower than expected CPI inflation number. It led to an immediate follow through on Friday, Monday, Tuesday. It was just straight up action on very high volume. So this is a significant accumulation. And typically when you see that price action, the pullbacks at some point end up being decent buying opportunities. So I will be paying attention to see if IWM, the Russell 2000 ETF here, can create a higher low and potentially set up for a bounce. So there might be a trade here also on the long side. But then keep in mind that already with that Friday's close, IWM closed below its volume average weighted price since that gap. So if we take the price action since that gap, the average buyer is already underwater. So I would be paying attention for a potential move above that 218 level to confirm that buyers are back in control. But I wouldn't be surprised to see like a deeper pullback and maybe just sideways consolidation until the rising 20-day catches up with price, which would offer a better entry point. And similar to small caps, we saw similar action in biotech. Also a big gap up, follow through, and then a pretty, even though here we saw a pretty significant pullback towards the second half of last week, it's already testing that gap from the CPI gap here, from the CPI report. So biotech continues to be choppy. So let's see if it sets up here. Again, one of the strongest sectors since that CPI gap has been financials. Here's the chart of the regional banks, ETF, KRE. As you can see, extreme relative strength last week. Even when small caps pulled back, when biotechs pulled back, this one just kind of went sideways. So definitely among the strong sectors right here. Regional banks, despite all the talks about issues in commercial real estate and how banks are going to have to take big losses, the market so far doesn't care. And this is one of the strongest sector. So I will be paying attention here to see if it will continue to digest that big move sideways. That would be extremely bullish. But still, it's currently so extended above its rising 20-day that I wouldn't really want to chase it long. But I also don't want to short it just because it's basically the strongest sector, and its leverage ETF is like DPST if you want a little bit more leverage, 3x long regional banks, and the other one is BNKU, which is 3x long big banks. The other sector that saw big inflows last week was home builders. Obviously, with declining interest rates, the market is betting that home builders will be among the big winners. So big rally, and also kind of went sideways, fizzled a little bit towards the end of the week, but given the weakness in the S&P, in the QQQ, home builders are definitely showing notable relative strength. And you can see here how the relative strength line just jumped and it just keeps going higher. So one of the sectors to pay attention to, and obviously anything related to home building, to home renovation was also hot last week. Here's Home Depot. I had a swing trade here. Here's some calls that worked out great, but also some of the furniture stocks have also been acting constructively. So let's see if they set up here for another leg higher. So another theme that stood out last week was the strength in anything crypto related. Bitcoin had a big move, and anything related to cryptocurrencies was on fire. Here's BITX, which is a 2x long Bitcoin. Big bounce here, and a couple weeks ago, I think we talked about that, how Bitcoin tested its volume weighted average price since its November rally a couple weeks ago, and ever since it's been just straight up very strong action in the sector. And some of the stocks related to it, like Coinbase, are showing notable strength here and kind of setting up for a potential breakout, even though keep in mind that this stock is super volatile. As you can see here, there was a breakout attempt, big down move a couple days later, and then another upward move the day after. So this stock is like a intraday trader's dream. But if you try to swing it, probably it makes more sense to use a smaller size, just because it's just so volatile and so back and forth. But yeah, anything else related to crypto was on fire. Here's MicroStrategy, MSTR, closed super strong on Friday, and Robinhood is now also considered a crypto-related stock, acting constructively above its rising 20-day moving average. And this is what I have so far for this week. See you next week.